Dr. Surjit Bhalla joins in from Delhi, as always. Dorab Sopariwala is with us here in our Mumbai studios. He's joining in right now. Saumil Trivedi is with us to run us through charts, and Sarvendra Srivastav and Shakti Patra, as always, here on the show. Good morning, all of you. Thanks very much for being with us, as always. Surjit, I just want to start with the global bit. We spoke briefly about the LTRO2, round 2 yesterday. The offtake by banks has been almost exactly in line with what the expectations were. That's behind. Some data points out of Europe didn't look all that bad. German GDP, consumer spending numbers. In the US, Ben Bernanke's commentary was, was more positive than negative. He said that he's seeing signs of improvement in the labor market. Things seem to be falling in place, Surjit. If you were an optimist to begin with.
This is, and Bernanke, this is the first time he sort of sounded halfway positive. No, I think the global news that has come out yesterday and today with China's PMI is really substantiating what several of us have been expecting, and if you will, vindicating the policymakers. I mean, let's give policymakers in Europe and in the US some credit in that they have handled a rather precarious situation extremely well. We can't say the same thing about the Indian data, which we can discuss in a minute, but I think they have guided the international economy surprisingly well, and I think the benefits are coming and will be forthcoming throughout the rest of the year.
The key question for all of us sitting in India, and I guess other countries as well, is how much of all that money which has been lent to banks at very cheap rates is used for carry trade. Surjit, right?
Yeah, I guess we'll continue to have this debate until a year from now, when inflation again won't be there, and then I think this whole liquidity story will be somewhat subdued. As you know, and as one has emphasized throughout, there are two portions to the story. One, we observe liquidity, and the second, we observe or do not observe real growth. And the third is inflation. So the only way in which the liquidity story can be rejected is by if there is growth without, if you will, accompanying inflation. It remains to be seen. My bet is that this year we'll get solid growth and we'll get inflation going back to the era before 2008. So we've had 2008, 9, 10, 11 with rather elevated, as you call it, inflation, especially in emerging markets. This elevated inflation has not occurred in the developed markets. This is a point to note for all those who argue that all of this money is just going into inflation. So, and I think the developing economies like ours will see substantial reduction. We've already witnessed a continuous series of these reductions in the inflation rate, and I think we'll continue to see that for the rest of the year. That doesn't mean that we'll go down to zero inflation before somebody extrapolates. What I mean is that Indian inflation will be somewhere in the 4 to 5.5% range.
Okay, got it. Andrew Ferris is Chief Investment Advisor for Asia at BNP Paribas Wealth Management. He joins us on a phone line from Hong Kong. Just wrapping up this point about LTRO round 2. Andrew, good morning. Always great to have you with us here on Profit. What did you make of this? And simple question, in your assessment, out of the 500 plus billion euros, how much will be used for debt refinancing and how much comes to emerging markets and other asset classes?
I'm sorry, I didn't understand the question at all. I can hardly hear you.
Okay, I'll go slow. How much of this money that has been lent to banks by the ECB?
Sorry, what money?
What money?
By the ECB? LTRO.
Yeah, go on. Sorry. Yeah, I have to understand the question before I answer it. Okay.
I think we've got you on a terrible line. So just one more try here. So how much of this money at the bank end is going to be used for refinancing debt, and how much of it will be used for carry trades, Andrew, in your assessment?
I'm sorry, but I can hardly
We'll
hear
get you back.
at
All right, we'll get you back on the phone line. Sorry about this, Andrew. We'll sort of dial you back and try and get back to you on this particular point. So I guess that's the big question, really. I mean, we got you a chart yesterday from the 21st of December when round 1 happened. I mean, all asset classes have taken off. I mean, straight vertical 90-degree move. Yesterday, we had the second round, which again was pretty much in line with expectations. Surjit, I believe you've got a point.
Yeah, now to answer your question on the carry trade, basically let's assume a substantial portion is for the carry trade. What does that do? Carry trade means you invest in the stocks and bonds of the emerging markets, and if you will, the currencies of the emerging markets. Does that lead to growth or does that lead to inflation? Now, obviously there's some breakup between the two, but if a substantial portion of that is going into investment, is going into growth, then it's a really good thing.
Dr. Bhalla, generally that goes and creates bubbles, isn't it, historically? When you lend people at 1% for the next 3 years, again they go into trouble for the next 3 years, again lend at probably 0.5%. They just keep creating bubbles. I mean, that's what history tells us, isn't it?
And the world economy has yet to recover to the 2007 levels. So we are talking over here where real output is, if you will, somewhere around 4 to 8% lower than it should be in the world. That is not a situation which says that there is a bubble.
Prashant, this carry trade business has been with us for donkey's years now, okay? Because we have always had a very strong differential of interest rates. Now you're telling me that in 10, 11, when the market went down 25%, there was no carry trade? Of course there was. So I don't think there's too much to put into the fact of carry trades. Because carry trades, people are not that dumb or that smart that there is money available at 1%, somewhere you're getting 10%. It's not that easy ever to make money in market.
No, but Saumil,
there are always problems of the risk to the currency, risk to the volatility of the currency, etc., etc. So a carry trade can have a short burst or an infusion. But with all the QE1 and QE2, so much of liquidity was flushing around in any case. So the carry trade issue, I don't think matters that much in my opinion.
No, my question very simply is, all this rise in financial markets that we're seeing, is it because of all the easy money which is available with banks in Europe and in the US?
So that's a double-edged sword, and I'll agree with Shakti that somewhere it is going to catch up. By that time, as Surjit has been very emphatic about that, by that time.
Okay, I'm going to come to you. Andrew Ferris is back with us at BNP. Andrew, I believe you can hear me now. Will the LTRO round 2 money, Andrew, and we were discussing it here, be used to sort of fix the balance sheet at banks? Of course, a portion of it will be in. How much of it will find its way through, financial assets around the world? I mean, how much of it will be used for carry trade in your assessment?
Yeah, let's split the answer in 2 parts. Part number 1, there is no guarantee there is going to be LTRO number 2. Draghi was absolutely clear that LTRO number 1, which was before December, it was about 400 billion euro, was more than sufficient to ensure liquidity in the banks. So I'm afraid I have not seen anything that tells me that the European Central Bank is going to inject further liquidity. Point number 1. Point number 2 is the whole point of the LTRO was to ensure liquidity.
Andrew, what was yesterday? What happened yesterday? That is round 2, right?
Well, round 2 depends in which way one is looking at that, okay? Because LTRO can have a lot of different definitions in exactly the same way that the quantitative easing, or number 3 in the US is or is not taking place. But let's come directly to the core of your answer. How much of it is going to do yield curve trading and how much is going to be lent? The European Central Bank is not interested in lending money to the banks in order for them to lend it on to clients. What the European Bank is interested is to make quite sure there is adequate liquidity within the European banking system in order to ensure that as they come to either refund, turnover or refinance going forward their own debt, there is going to be no sharp spikes on interest rates. Full stop.
Andrew, there is obviously a whole lot of analysts and economists have said what happened in LTRO1, this time around there's going to be much more money that's going to come back into the real economy with LTRO2, with the Greek debt write-off that banks have been taking. This is going to be a slight bit of a help to them as well. And a lot more smaller banks will also start to participate, which will be a relief as well.
Yeah, well, let's repeat this. The takeover yesterday of nearly 700 billion from the European Central Bank is simply a continuation of the bank's activities, okay, to maintain liquidity. So, the insistence whether they are going to use it in one way or another, I think misses the point, because the European Central Bank has increased the tenor by which it's going to lend. It lowered the quality of the paper in which it's going to lend, precisely in order to ensure that the liquidity in the system stays. In the same way that the Fed has nearly tripled its balance sheet, but the spillover of that into actual lending in United States, or for that matter in Europe, where right now the growth of lending from banks in general is sharply decelerating, in effect is almost irrelevant, because the whole issue is to maintain liquidity and keep interest rates down. Now, whether this is going to spill over, okay, into lending, it's going to be an additional bonus. The banks are also very concerned, of course, with Basel III, and the fact, of course, that the majority of them had to readjust their overall balance sheets in order to maintain the kind of capital ratios that the European Central Bank has been asking them.
All right, Andrew. Got it. Thanks very much. Hope to see you on camera soon. Appreciate you joining in this morning with those quick thoughts coming in. All right. Let's move on to our data points. I mean, that's global stuff. Let's move on to our data points. The third quarter GDP numbers were below expectations. Much below expectations, some would say. We did a quick poll. The poll suggested that the number should be close to about 6.6, 6.7% growth. The number was lower. Let's start talking about that. What does it mean for the full year growth? Would that have to be brought down? And of course, fiscal 13. I mean, one underestimating the slowdown in the real economy. Dorab, let's start with you.
We're looking at growth. I think growth should be deconstructed into its components. Look at industrial growth. I mean, manufacturing growth is 0.4%. I don't think in the last 10, 12 years it's ever been this low. At 0.4%, the only good thing is that gross capital formation is up, which means, people are investing. But I think, to pick up from here, it's going to be a slow pickup, because, 0.4% is very, very poor. And I think services haven't done well, but you can't expect services, though it's 55% of GDP, to carry the whole sector. Agriculture, if it does well, we'll probably get 1% growth out of that, if you grow at 4 or 5%. But unless manufacturing moves up, and if sentiment moves up, PMI is up, but I get worried about PMI sometimes. You get great PMI figures followed by terrible manufacturing figures, I mean, are you optimistic, pessimistic? I don't know. But I think this budget will really, I think, Mr. Mukherjee has really something going for him, in that, he really has to work hard, because we seem to be in a bit of a hole and we have to climb out of it. And, obviously the elections are coming 2014. We need more growth, so we need a fast climb out without too much inflation, too much overheating. I think it's going to be a tough job for him.
Surjit, you want to come in on the quarter 3 GDP numbers, 6.1%. Yesterday also we were talking about how there has been a slump in manufacturing across the board. When you talk about capital goods as a space as well, growth out there also seems to be in a bit of a limbo. So on ground, the situation pretty much remains unchanged.
No, I don't think the situation remains unchanged. I think what yesterday's GDP numbers emphasized and underlined is that in 2011-12, GDP growth will be lower than the year of the Lehman, which is 2008-9. Now, somebody has to carry the blame for this. How is it possible that in 2011-12, our GDP growth was lower than the biggest financial crisis that the world has faced since 1932? And I think, part of the blame goes squarely to the RBI, and part of the blame goes squarely to the government at the center. And I think, we should acknowledge that, the RBI should acknowledge that it got this massively wrong by its continuous rate hikes that it implemented last year. So to answer now what Dorab was saying, I don't think it's that tough a job to get us out of this hole. We have dug ourselves a deep hole, but if we recognize what were the reasons behind us digging this deep hole, this self-inflicted wounds. I like that phrase, you know, apne pair pe apni kulhari. We have done that. Now, we know what we did, and therefore I think the solutions are also well known. The deficit needs to be brought down, and I think Mr. Mukherjee will deliver on that, or should deliver on that, let's put it that way. And I think the RBI should deliver on reducing interest rates quite substantially by 200 to 300 basis points in this year. And I think we are back on track for above 8% growth in the next fiscal year.
You know, banks are one indicator, banks' performance is one indicator how well the economy is doing. This morning I read the Stand chart, the biggest bank, foreign bank in India, its profits last year down by 33%. You know, if industry doesn't grow, I mean, where are you going to grow? So what is the Prime Minister, FM going to do to spur industrial growth here? Services will grow anyway, and we are a domestic economy, so we shouldn't think that what happens in America, I know it influences the stock market, but I think we are a domestic consumption-led story. So we have to grow domestically for the economy to move up.
Prashant, see this, look at this, how this market is weird, and market just watch the prices, tells you everything, I think. December 20th, it was 4,544. This is a quarter ending December figures. Now you can't tell me that the guys inside or those who are in repulse about it, maybe they went off by point percentage here and there, but the sentiment was decidedly down that the growth is coming down like off the cliff. Despite that, in 2 months, this market has put on 20%.
That's ECB's LTRO.
No. That is what you want to you want to throw it in that. That's an explanation. You want to take it, but it has done.
Right.
That's the proof of the pudding is get in all the liquidity that you want. But if that market does not have the resilience and the structure to go up, it will not go up. That's as simple as that. Similarly, as far as banking is concerned, even this month's closings of all banks is brilliant closing. HDFC is going to another new territory. Kotak is starting to make a big move. They are all brilliant moves for the last month, carrying on over the past month, which means that banking is retaining and regaining strength in big way. So if you go to the argument that if we have dug a deep hole for ourselves, maybe after that a little bit of flushing of water can sort of bounce you back very vigorously, and that's what the market is sensing.
So if the finance minister is watching the markets every day, he needn't be very worried, right? He could sleep easy, because I mean obviously the market is saying that the economy
as of now, I think the finance minister can sleep easy. As of now, going by the market, unless it slips below 5,100, we'll see. But what has happened in the past 2 months does keep on adding weight to the argument that 4,500 is going to be very, very tough to take out on the downside.
I think, Prashant,
and therefore it is a market where you keep on spotting opportunities. The other way I look at it is you say you pick a stock by stock as you like them. There are 8 stocks here. They are all doing well.
We'll get to specific stocks.
No, what I'm just trying to say therefore is that there is something happening here, which is you want to call it liquidity base, whatever. But the point is a base has been built, and it's for you to sort of, and if it is going to be going up on wall of worry, all the more better. That is going to go much higher.
Questioning that. Nobody's questioning that.
I think, Prashant, the big mistake we are doing over here probably is that we are correlating markets and GDP growth almost 1-to-1. Look at the fastest growing economy in the world, China. Look at the market. They have done, I mean, they have underperformed, in real terms, probably even Greece over the last 2 years. So Shanghai Composite is the worst performing brick market for sure. One of the worst performing major markets in the world, and it's the fastest growing economy. So looking at markets at 5,500s and saying that okay, GDP 6.1% was an aberration, markets are telling us it will grow at 9 or 10 or 12%. I think that's a big mistake.
I don't know how to think about that. Take a look at the US for example.
Let me come in on that.
Market is what, 5-7%.
Dr. Bhalla has a point.
Yeah, Surjit, go on.
Yeah, look, let's look at the China example. Let's look at the big picture and try and address the puzzle that Shakti has pointed out. Basically, China is on a long-term growth decline. That is, it was growing at something like 11-12% 3 years ago, and it's now down to something around 8% and scheduled to go down a little bit down to something like 7%. That's a very, very different story than most countries in the world. So therefore, it proves the same point that, if you will, the markets are forward-looking. They look at growth prospects and look at the delta in growth, the change in growth. The level of growth is not important for stock markets. It's the change in the level of growth rates that is important. And that is why, if you will, China is likely to underperform. Chinese markets are likely to underperform the international markets, why the US market is likely to overperform, and if you will, why the Greek market, stock market, 3 months down the line will start to overperform, even though it has all the debt burdens in the world. So just always keep looking for the delta in growth, the change in growth, and that will tell you where the markets are headed.
Okay, that's an important point. That's an important point. So this combination of back next to the wall feeling combined with bad fiscal situation right now, and it's in a way inconceivable to think that the government has already not showed the key proposals in the budget to the RBI. The policy is in the 15th, the budget is in the 16th. So will the government do enough in the budget so the RBI can cut rates, I mean start cutting rates, and that sort of...
I think the government does realize that rates need to be cut. I mean, the industry figures are now been occurring for so long that I think the writing is clearly on the wall as far as industry is concerned, that rates must come down. Obviously, you know, I'm surprised that the policy couldn't have been shifted back a few days, just the way the budget was, to ensure the governor, I'm sure the governor knows what's in the budget, but I'm saying that I'm surprised that it wasn't shifted back, so the governor could officially take into account the budget. But I think the finance minister somehow has to, without increase, it's a very tough act, stimulate the economy, but don't increase the fiscal deficit. You know, I mean, brake on the one foot, accelerate on the other foot simultaneously. It's a very great balancing act, and one hope he performs it successfully.
Prashasta Seth is with us as well. He's joining in, Senior Fund Manager at IIFL. So, I mean, for portfolios and as a money manager, Prashasta, I mean, the general feeling is, you know, expenditure was going to be brought under control, and the focus will be on the fiscal, right? I mean, away from populist kind of measures to focusing back on the fiscal. What does it mean as a money manager? Does it mean sort of going underweight consumer staples, big FMCG kind of names? I know it's not a direct sort of a correlation, but broadly, broad implications.
The broad implication would be that obviously that you would see some slowdown in terms of demand that you are seeing in the consumer durables or in the consumer staples or autos, for example. If you see excise duty essentially going up or service tax going up, obviously I think you see the demand sector essentially seeing some amount of slowdown. So yes, I think if that is going to happen, that would mean that yes, you will see some amount of slowdown. Now, whether or to move out or not from, you know, some of these sectors is essentially a slightly longer term call. Now, yes, you might essentially see a 1 quarter kind of a dip in the demand environment for some of these companies. But I think in the medium term, I think we have seen demand bouncing back, and if economy continues to be strong, you would see demand to be fairly stable for some of these companies in the medium term. Also, I think a part of it is probably already in the price, because if you see in the last 2 months, I think some of these stocks have actually not performed. So obviously there is a bit of a concern with respect to a slowdown in demand in the consumer sector, and I think it's partly reflected in the prices as well.
Okay, I mean, so that's already starting to happen. The market is already starting to give that weight. We got the pre-open session coming up on your screen. So a 10-point pop higher on the Nifty, 15-16 points up on the Sensex. HDFC starts out higher, 7.5% up is what it's showing. JSPL is down 9 points. Let's pull up ONGC. That block is going to be sold today in a special window. ONGC is showing a 10% gain, but I think that should cool off in a bit. On the BSE, right, it's already starting to cool off 0.5%. Those are NSE prices. BSE prices were showing a bit of a pop. We'll have a BSE exchange official coming on board to run us through how the auction process is going to work. It's happening for the first time in recent memory. 290 is the floor price on ONGC. Ranbaxy is up 1.6, 1.7% higher. HCL Tech is down 2.5. Wipro is down 2.5. JSPL is showing a 2.75% gain. DLF 1.5% lower. Bajaj Auto 3.25% higher. SAIL is up. Kotak Bank is down 1%. Power Grid is lower. I mean, not very much. Flat. M&M 1.25% lower. HDFC Bank 1% higher, and so it goes. So I mean, keep an eye out on auto stocks as well. We got you expectations earlier in the day. So all the stock of M&M is going to sell so many more SUVs in UP and other election states. All of that, I mean, did that happen? Did that not? I think we'll get answers to all of that today in the February sales numbers from auto companies, especially companies like M&M, around which these expectations were built. Sterlite Industries, a 1/4% higher. HDFC, a quarter. Tessagoa, about a 1/4% as well. So this is what we've got as part of the pre-open session. The index is down 28 on the Nifty and up 12 points on the Sensex. 908 we get firm prices. Rupee is opened up as well. Is down 1/3%. 49.14 on the rupee against the US dollar. So that's the pre-open session. ONGC is going to be in focus as well. Surjit, so I mean, just closing comments on this entire GDP market thing. So you remain confident, and the market will go a lot higher before doing anything else, right? I mean, that's your stated stance. You got your correction.
Yeah, look, I think you got your correction, and I think if you will, forecast that the market will remain strong and continue sluggishly perhaps to move higher, because we've got the election results coming out, and we've got the RBI meeting, and we've got the budget. But I think if you're asking, do I remain confident that this year GDP growth rate will accelerate from something like 6.5% to something above 8%? Yes, I remain quite confident that we will see that.
Okay, all right. Surjit, are you at that auction window this morning for ONGC?
No, we're not, but I obviously will be watching it.
All right, 297 on ONGC. Prashasta, what's your thought process around ONGC? How should one look at this?
I wouldn't kind of go and buy at these levels, frankly. There is no clarity in terms of the subsidy sharing. Earlier the thought process was that the government will probably come up with subsidy sharing formula, give decent clarity on the subsidy sharing by upstream companies. With the crude where it is, and essentially no clarity on how, let's say, Q4 will pan out in terms of subsidy, I wouldn't think that at these levels there is a decent upside from the current levels. So I would have thought that you would get a floor price in the range of 270 to 280. So 290 is obviously ahead of expectations in terms of floor price, and that doesn't leave much on the table for an investor to go and buy it on the auction. I think you'll definitely get a lower price than what you're seeing in the auction right now. So I would definitely avoid it.
You could buy it lower than 290 is what Prashasta is saying. There are these other.
If the auction price goes high,
yeah,
it means the government-backed companies are buying. If LIC buys, the auction price will be higher. I think they'll be, because I mean, I think there's enormous pressure for the government to realize the money, and there are enough public sector guys around to pump money in. I wouldn't be surprised.
Institutional interest has already been started.
Yeah, but what price is the question? I agree with you. Everybody's interested, but the question is, if the price goes high, I think the public sector guys will have been told, take the price up. They will try.
Obviously, it will be more than 290, right?
No. I mean, how high it goes, I think is a question of who.
Analysts that we've spoken to said 300, and to a certain extent even 330 for that matter.
330 is the fair price.
Right.
In 12 months time, 2 years time, 3 years time.
At the end of the day, we'll know, I presume, what actually happens.
There are 2 points here, Dorab. One, do you think this is, so the market is looking up, the government is able to do this auction quickly in 1 day, 5% done. I mean, others can happen, and that big 40,000 crore divestment.
But I think they said clearly the 40,000 crore won't be reached. Frankly, even if there is 30,000 crores, frankly, if I were in their place, the deficit is so big anyway, then why use it up this year? Because, 12,000 crore will probably save 0.1% if they're on the deficit. So, let it go in at least next year.
Right.
Apparently, there's a panel meet today to discuss divestment under the EFM. They are going to be sitting and deciding divestment.
So I don't think they're really, I think they'll be happy with 20,000 crores disinvestment this year and take that bonus from this year into next year. They'll sell spectrum next year, because next year you can't have this kind of deficit, just isn't on.
The other point is the auction route. Why the auction? The government is fixed at like 290. It's higher. It's higher compared to what when the price was announced. In an FP, you usually get a discount. So we heard some voices saying, retail should have got a discount. What's the point? You want to get more retail participation. What's the point of this entire exercise?
I never understand this discount business. Why should anybody get a discount? I'm the shareholder of a company. If I own the company, I must sell for the nation to benefit. I must sell at the best price the nation can get, because the nation is the owner of this company. You can't say, I'll do this guy a favor, that guy a favor. We introduce all these new things, and then we get those NSDL scams or NSDL scams where 20,000 accounts are open, Gujarat by some little lady, who then distributes all the retail goodies to everybody. I mean, why do we distort the market in this fashion? We all have to pay the price.
Okay, yeah. So I mean, the system sort of gets it done quickly with minimal delays. The auction process, the auction route, and I mean, we'll find out starting 9:15. We'll find out. We've got a chart here, Sarvendra, ONGC.
Yeah, absolutely, Prashant. The same chart that we had a look, I think yesterday, day before, being quite range bound between 240 to 300 over the last 12 odd months. Now, and the short-term trend channel, the yellow one is at it's also around a 20-30 point kind of a trend channel. Both are converging around 295. So the price at 295 seems to be bang on there. Now you'd want to break out of this to get higher targets. So essentially looking at a 60 point range on this particular channel. If you break it out on the upside post FPO, then you would add 60 rupees on the upside from the breakout. So that would be 295 plus 60. That is the best case I can see next 3 to 6 months for ONGC going forward. And similar targets on the downside, you fall back towards 240 if at all. But assuming with this FPO you will break out on the upside, 360, 365 is the max that I can look on this stock for the next 3 to 6 months.
Do you have a strong view on oil prices? Crude oil prices?
I continue to maintain that crude will slip back at least till 100 and then finally below that. It is definitely at a crucial juncture, and I have been closely watching that. 108 to 1010 is a long-term kind of a resistance area for crude. If it breaks out of that range, then definitely the all-time highs at 147 would get challenged, or they should get challenged. But as of now, if you ask me as of today, I think we are slipping back below 100.
Over what period of time?
3 to 6 months.
Fine. So you're saying by June or July, August, we are at $100?
Absolutely,
wow.
absolutely.
And so long as the rupee behaves itself, we are fine.
Absolutely.
And so Sarvendra is saying rupee will behave itself, right?
Yeah.
That's the
Why behave itself? It will go back to 46.5, 47.
Great.
It can do
Rupee
that.
will rally, the oil will collapse, and the Nifty will go.
I have a different view here.
Happily ever after.
I have a different view here. And I am not looking at the international dollar price, I'm looking at the Indian price in terms of that takes care of the rupee fluctuations. And last month, the kind of, on a monthly chart, and we just completed a monthly chart, has negated that pattern. The moment this crude starts trading above 5,500 on the MCX, okay, you're going to see fireworks in crude. Exactly. Crude is going to boom. It's still not in the bag, but there is all things are in the making for this crude.
You're looking at charts.
Yeah, just looking at charts.
Okay.
That is what I said. 1110 would compare with that on the MCX price. 1110 and above, we are looking at a much higher level.
The downside looks, given this month's closing, the pattern, downside looks very minimal.
Prashant, I think last evening's flash crash, which lasted for about half an hour, the only thing which has rebounded absolutely strongly. Yeah, we had a flash crash last evening. Nobody realized that.
What did rebound? What did rebound?
Crude has rebounded.
The flash crash was in gold.
Absolutely came. It's back to 107.5 WTI. The only thing that has rebounded strongly.
Gold fell about 3% as well.
And that is what gives me confidence, Prashant, that the way the gold is cooling off, I think we are headed for much lower levels. And
secondly, if you buttress Surjit's argument of growth coming worldwide, crude has no chance to go down. Simple.
Why? I thought crude demand increases.
So therefore price will go up.
That's right. That's what
I'm saying. There's no case
saying the opposite.
No case for crude to come down on a layman's argument basis, if at all that comes out to be true.
Surjit?
Let me come in on
Yeah.
that. Yeah. No, basically, look, the crude price today has two components in it. One, obviously, world demand and the change in world demand, which is going to improve. But the other is a premium on the political uncertainty, on the Iran uncertainty. So therefore, we can't take this price, which is 107 or 106, as indicative of the demand side. It's indicative of both sides. And therefore, if there is a substantial premium, and let's say about 10%, that means that crude can go down with world growth going up.
And Iran uncertainty is never going to go away. It's just going to. You think the guys are playing kicking games? No, what I'm saying that premium is there. That premium is not going to go away. What happened in Iraq? We went on for 6-7 months playing games with Saddam Hussein. Finally, never melted, and they just had to resolve it in one way or the other. This premium will go.
But you know, there are a couple of things.
Yeah, that's my view. That's what I'm saying.
There are a couple of things happening on the oil front. I mean, basically oil exploration, shale oil, and if you will, basically, I think the supply situation today in oil is a lot better. Libyan oil has come back to the fore. So I think, you know, the supply situation is a lot better today than it was 2 years ago. That's all. But, you know, this is a, if you will, a controversial and a mug's game as to how much is a political premium. I don't know. I guess we'll realize once the market does tell us as to what happens to the price of crude.
Dr. Bhalla, on the same note, maybe on a slightly lighter note, if crude at 107.5 has a political risk premium, what is S&P 500 at 1370? What's the kind of liquidity premium it has got?
I would say about, if that has a 10% premium, the stock markets around the world have about a 15 to 20% premium.
So the chances of the stock markets actually cooling off are much higher than crude actually going down.
But then there's a growth side. I mean, it's both sides.
Just look at the prices. Dow is doing brilliantly and is heading higher. There is no two doubts about that. All right. So I mean, forget the premium is going to go up, whether by liquidity or what. Okay. Dow, if you look the Dow chart, Dow is doing brilliantly well.
And again, the whole Iran thing. Nothing new is happening, right? The same kind of rhetoric. Nothing new is happening.
I think what happens is that every few months, the Iranians and the Israelis between them get a little bit of extra action going.
And they trade crude probably.
One doesn't know whether they are in some agreement to sort of share the loot of the increased prices. But I think the Iranians seem to want to keep things on the boil. And when things cool down, another time the inspectors go, they don't allow them inspections. So I think the Iranians too are, because don't forget, you know, if they keep the oil in, I think now they're going to keep oil on the tankers because they can't stop digging for getting the oil out. They put it on tankers and go around the Straits of Hormuz, around the the Persian Gulf. So long as they are not losing out because the higher prices. But I think over a period, I think unless I just don't expect, I can't see how this can be resolved. And I think we'll have to. What will happen is that I think as uncertainty continues over a period, I think the value of that uncertainty goes down because if there's always a crisis, you then
nobody cares.
Now slowly care slightly less. You all care, but you care a bit less. Hopefully that will happen over the next year or so. And unless they blow it up again, the crude premium should come down. But the premium will be there for a long time to come, I think. Unless Iraq, which is a very large supplier of oil, it goes up to its old 6-7 million barrels. That's another matter.
We got all kinds of views. We got all kinds of views on crude, and I mean.
So Iraq is the pipeline also, so Turks will get it out.
Surjit, quickly.
Yeah, one last point just before the market opens. Basically, you can estimate how much is a premium on oil, the political premium. Prior to the 2008 crisis, basically, and if you will, for 2 years afterwards, 80 to 85 has been the range where world price of crude has stayed for the last several years. Today, obviously, it's 107. So I think a 15% to 20% premium is very much baked in at these levels already. So therefore, if the political side comes down, there are prospects for about a 10% decline in the price of crude.
Okay.
And alternatively, that if growth does sustain, does come about, you should not expect crude to go much higher from these levels.
Okay, all right, got it. We've got V. Balasubramaniam, Chief Business Officer at the Bombay Stock Exchange, joining in right now. Thanks very much, sir. Good morning. All set for the auction?
Yeah, absolutely. All set for the auction.
What should we watch out for at 9:15?
Today is a big letter day, so what we see is I think people will start bidding in now. And
will we get any data at 9:15?
Not at 9:15, but what will happen is...
Alright, I'm just going to get back to you. So ONGC will be in focus, and Mr. Balasubramaniam will run us through what to watch out for, because there are indicative prices, cumulative bid quantity at regular intervals which are going to be displayed. Alright, market opening 15 points lower on the Nifty, 40 points lower on the Sensex. Sterlite Industries at 124, RCOM 94, 1% lower, JP Associates 75, stocks down about 0.5% plus, Hindalco 146, 2% off, R Power 118, 1% lower, BHEL 301, 2.33% lower, SAIL is down a third, 103, HDFC Bank 520, nearly 0.5% higher, Tata Steel at about 468. ONGC, if we can sort of get the prices up, is starting out, one would assume slightly higher as well, 1% odd pop on ONGC. The auction is being conducted in a separate window, so keep that in mind. 296 on ONGC. The other trade goes on. HDFC, JSPL, and more stuff opening up. SBI at about 2,222, 1.25% lower. ICICI Bank is down a little bit as well, 1.25%. Sesa Goa 214, and so on and so forth. 20 lower, 53.63 on the Nifty dividend.
Mid caps and small caps, focus on the indices there and how they've opened up for trade this morning. Yesterday, they were also a little bit lower. By the end of the day, did not manage to peak out. Nifty Junior, BSE 500, mid cap, small cap, the marginal downward bias is what you're seeing on most of them. The small cap index slightly in the positive territory. Individual counters focus on all of the auto majors as well. They come out with their auto sales numbers. Bata came out with a good set of numbers. Remember, we've been talking about Bata a whole lot, about what the profit expectations could be. Their net profits came up 30.8% at about 45 odd crore rupees. Bata has come in at 1% higher this morning. 706 is where it's been trading at. Side of that, results today will be watch out for, will be Emphasis, so keep an eye out on that. MTNL is up 5%. You've got State Trading Corporation up 3.5%. Some sugar stocks doing well, so in Triveni Engineering, Dish TV is up 2.5%. AstraZeneca is up 2.5%. Dishman Pharma takes a move on the upside of 2%. National Fertilizers, Shipping Corporation of India, RCF, all of them higher by 1 and 1.5% each. Jet Airways, Tata Chemicals, Sri Lanka Sugar, Tata Coffee, all of these stocks have opened up in the positive territory as well. From the pharmaceutical side, Biocon also does well on opening. You've got a 0.5% move on that stock. Most of the smaller banks have not shown too much of a move in the morning session, but we'll wait and watch as to how they perform. On the losing side, Amtech Auto is down 9%, Apollo Hospitals is down 3%, Chambal Fertilizers, India Infoline, Lanco Infotech, Ashok Leyland is down 1%. So real estate / infrastructure and construction stocks have lost ground today. You've got aside of Lanco, even in IBRCL, Infra Unitech is down in the session. HDIL is down 2%. Godrej Industries is down. We've got Syntex Industries also lower by 1.5% in the session. All in all, still the market breadth looking on the negative side. Syntex is down by about 88 points. We've got the Nifty lower by about 31 odd points in the session. But ONGC in focus today as the auction route opens up. You've got two windows for the institutional investors as well as for the retail investors. We've got Mr. Balasubramaniam, who is the Chief Business Officer at BSE, who's joining us. We weren't unable to complete what you were saying.
So primarily what will happen is today we have got a web-based system, internet-based book building software in which the bidding will happen. So it's not part of our normal trading system as such. So it's a completely separate window. But that window is what is used by people for even for an IPO and FPO bidding. So already investors and brokers are used to this particular platform. So there is no change in that. And obviously the bidding will happen on a single day window from 9:15 to 3:30. The last 30 minutes between 3 to 3:30, no modifications and cancellations of bids will be allowed. And typically from a risk management perspective, all the bids which are going to be submitted, the margins will have to be submitted upfront, 100%. So in that sense, there is never going to be a failed trade. And in terms of the allocation which will happen, typically the bidding is going to happen in both the exchanges, and we'll be pooling and collecting the data. Here in this case, BSE is the designated stock exchange. So the responsibility is on BSE to actually pool the data as well as to do the final allotment. So which will happen once the market finishes at around 3:30. So around 4 o'clock we'll probably have the allocations also out. So bids are like orders, and the allocation is equivalent to a trade. And that's when basically people know what they got allotted, and the margins which are excess will be released immediately to the broker. The trades will go out to the brokers as a normal part of the confirmation, and they will issue contract notes to the customers. So that's broadly the process.
Could you talk about the allocation methodology, this price priority, multiple clearing prices?
Yeah. So here in this case, in fact the SEBI circular clearly states multiple algorithms, in fact 2 algorithms. But here in this case, it's going to be basically a price priority kind of algorithm, which means that whoever bids in the highest price will get the priority. So typically there are, the way the whole structure is there, is that mutual fund and insurance are bracketed as one category of investors, and the rest are all called the other category, which includes retail, FIs, QFIs, NRIs, all of them. And the mandate is that 25% of the reservation of allotment will be to the mutual fund and insurance companies. But that's subject to they bidding at the right prices. So price is obviously the important parameter.
Here, the retail window is completely different.
Yeah, retail can definitely participate. Retail won't get a preference in terms of assured reserved allotment, but they definitely are among the rest of the 75, so they can actually go for it.
But are you saying that a mutual fund bids very much higher, still can't get more than 25%? The mutual funds, a category, an insurance company, are bound to 25% as a category.
No, that's not the case. 25% is minimum assured.
Oh, minimum assured.
If they bid the best price, then they are willing, they can get more.
They can get everything on offer.
Yeah, absolutely.
Everything can go to mutual funds.
It's again the person who is going to put the highest bids.
Right.
He is going to get the preference.
Then why this division across the two categories? If price is what drives it, why the division?
My sense is, I think it's a regulatory decision which has been taken, and my sense is that basically the mutual funds and the insurance companies are in some sense representative of the local domestic interest, and to that extent the government probably wanted, or basically the regulator, in fact it is for everyone, it's mandated that these two category of investors will get a 24% priority.
But you're saying that even they have to match the price?
Absolutely, price is paramount.
Do we get indicative prices through the day?
Yeah, the indicative prices will start coming in after 3 o'clock.
No,
during the last
very late,
30
not
minutes.
through the day.
During the day we will be seeing the cumulative bid quantity, and the good thing is only those bids will be accepted by the system which is above the floor price of 290 rupees. So in that sense, once you see the cumulative bid quantity, you get a rough sense that this is the level of subscription on this particular offer for sale.
When do we first see the cumulative bid quantity? What time?
It will start immediately as soon as the market starts.
But the pricing, the pricing at which there have been the highest amount of bids, which is the weighted average price, will not be seen.
Yeah, that will be seen after 3 to 3:30, and typically on every 30 minutes we'll be pooling both the exchanges data and be showing it on the website as well.
Just one last question. When do we get the final clearing price? Today afternoon or tomorrow morning?
Today itself. Today by
post-closing.
Post-closing, around 4 o'clock, once the allotment is done, the price will be, the price at which the allotments take place will come. All the trade files will go to the customers.
All right. Thanks very much, sir.
Thank you.
Is this the first time you're doing it?
This is a historical day. This is the first time this mechanism is kicking off. So in that sense, yes.
Thank you.
Thank you.
Good luck.
Thank you.
That's Bombay Stock Exchange talking about the ONGC share auction. It's already on, so you'll get cumulative bid quantity through the course of the day, but the indicative price only first gets put out at 3 p.m. So I don't have cumulative bid quantity right now, but I guess we'll put that out as soon as the data gets updated in a bit. 44 points lower on the Nifty. BHEL is selling off as we speak. I think it's down, what, 3.5%, 4%, and sort of picking up pace on the downside, 4%. So 295 on BHEL. Hindalco is down 3%, Axis Bank is down 2.5%, IDFC is down 2 1/3, ICICI Bank is down 2 1/3, L&T is down 2 1/4, Reliance Power is down 2%, DLF is down 2%, JP Associates is down 1 3/4, SBI is down by about 1 3/4% as well. Sun Pharma has got 1.5%, the only meaningful gainer. About 40 odd names out of the 50 stocks are lower on the Nifty 50. Just focusing on large caps for now. Prashasta, just a comment on BHEL and BGR. I mean, if you've ever owned the stock, BHEL first.
No, I think the problem is that the bidding that is being taken place is essentially happening at a price at which it will be probably very difficult for anybody to make money. So I'm not sure whether BGR will probably make any money on the pricing that they have given for this particular order, and that would probably mean that BHEL will also not essentially make any money. Secondly, I think this is probably the last bulk order that would probably be given in some time. So to that extent, I think these stocks have moved up, on the order inflow news. But my sense is that profitability continues to be a big concern for the sector, and order inflow from here on will probably dry up. So I would probably be a seller of both these stocks at these levels.
I mean, so 5,000. BGR was better off not bagging the 5,500 crore order. Is that a fair?
No, probably not. You have fixed cost, and as long as you are able to cover your variable cost, it's better to essentially have the order rather than not have it. But how much incremental value you will probably add in terms of value to the equity holders at these levels, at these prices, is something which looks very difficult at these levels.
Just aside of that, any other stocks that we're watching out for?
No, I think our preferred way to play, some of the up move in the economy continues to be banks. So I think that's one sector we, always held. We kind of never sold also, even at higher levels. So we probably bought some at lower levels, but I think that's probably our preferred way to play the improvement in economy. But beyond that, we continue to like, FMCG, pharma, auto, IT. I think at some point, we will revise our, change in stance post only the election, post only the budget, and if we see any tangible signs of improvement in terms of macroeconomic indicators. So until that happens, we'll probably continue to be, in some of the sectors that I've mentioned, and essentially playing the improvement in the economy theme through banks. So that continues to be a preferred way to manage funds, and it has been there for quite some time. So we continue to hold that way.
Yeah, you spoke about autos. Just today, most of the auto sales numbers come out for all of the auto majors. What is your expectations, and what's the trend likely to be, considering what we saw in the month of January?
Essentially, if you talk to the auto majors, essentially you get a sense that things have started to pick up in Jan and Feb. Things kind of virtually slowed down fairly significantly in November, December, but things are showing some signs of picking up in Jan and Feb. So to that extent, I think these numbers should be probably in line with the street estimates, or even probably slightly higher than that.
All right, okay. 60 on the Nifty, 60 points lower on the Nifty, 5327. So coming off pretty quickly. Now let's see if this continues. BHEL is down 4, Axis, Hindalco, ICICI, IDFC. Actually, I mean, everything just sort of adding a little bit to those losses that we started out with. That's what you've got. Futures, I think, at a 50-point premium. I mean, that refuses to go away or even shrink substantially, even on big down days. I mean, that's been there for the last, 10 days, 10 trading sessions now. So that holds. Dorab, just a quick point. We were having this chat yesterday with some bankers who were here in our office about what happens. Election results are on Tuesday, coming Tuesday.
Yes.
If the commonly held belief that SP and Congress don't sweep the state in UP or form some sort of a coalition at the center does not happen, that doesn't happen. How does the UPA react in that sense? Does it go into a shell in terms of just, sort of complete freeze on everything? And with an eye on 2014, do they start another, although they can't afford it, start another round of spending schemes and populist measures?
I think I have a feeling that things are so bad that bad results in UP can't make a difference.
Would not.
I don't think so, because you can't make it any worse. But if the results were good, I think it will encourage them to push their luck a little. But I have a feeling that the Congress is not going to participate in any government in UP, even with the SP. So the question is whether the SP or the BSP musters up, say, 160, 70, then gets independence. And as yesterday Mr. Nitin Gadkari described Ajit Singh as a taxi, that whoever pays the highest rate, he's available for a taxi ride. So if they can form a government...
What was that?
He said that the RLD, which is Ajit Singh's party, is like a taxi. It's available for hire.
Okay.
So, whichever party, so he may join the Congress now, but he'll go with anybody who offers him a good deal. Except for this last government of Mayawati, he's been a part of every government. Because he wants to be in government. I mean, who doesn't? You and I too also do, but he can't make it. So I think if that can be done, otherwise I think President's rule, for which Mr. Jaiswal was held up by the Election Commission, is a distinct possibility for 6 months, because I think President's rule can't go beyond 6 months. They can't get parliamentary approval beyond that. But in 6 months, the Congress might say that's a good chance. Let's send some good civil servants to UP in 6 months, make a change, and then go for another election. So, but I don't think that the government can afford to withdraw into shell anymore, because 2014 is too close. They have to move. The deficit is too bad. And the deficit we're talking about today is actually doesn't include the off-balance sheet items. They've got so many off-balance sheet items like these subsidies. This is not even on the balance sheet. So the subsidy actually is much worse than it shows. In fact, so many commissions have recommended that all these things should be bought on the balance sheet, so we know what the actual deficit is. There's probably 1% more hiding somewhere.
The actual deficit was close to what, 9%, 9.5%?
No, I would say if it's 6.5, or you're going to 7.5 or 8 something. Okay. But the numbers are out. The numbers are available, but not as part of the budget.
Ultimately, the markets are worried about, say, populist measures by the government if something, things don't go in their favor in the election. These days, political parties indulge in a lot of scientific research. Actually, has the Congress party done any research as to what is the incremental benefit they get in terms of votes because of populist measures?
I don't think there is a direct correlation. Sometimes they work, sometimes they don't. I don't think political parties, at least in India, are so well organized to be able to do those things. I don't think so.
They can't really say that, say, a farm
if I give one
helped us or?
Yeah, but you know, those things are 40,000 crore things, yeah. If you give everybody at 500 rupees, I think it will work. But you know, you can't keep on doing that all the time. Normally measures are much smaller. 4,000 crores, 5,000 crores, not a 40,000 crores Narega, which helps.
So there's still a chance that things don't go their way, but they still realize that it doesn't really matter if we go for populist measures or not. Let's get the fiscal house in order and do the right thing.
I think this year has to be the year of fiscal consolidation. They have to consolidate. There is no option because next year you can't.
Yeah. But this time this will be the real life scientific experiment of whether Rahul Gandhi works or not.
Yeah, the question that you have, before that you have to take call on what is work. Define that. Is it 100 seats, 50 seats? He's got 22 now, so it can't be worse than that.
Prashasta, I mean, so fiscal consolidation is the focus, probably excise duties go higher, service tax goes higher, more services under the service tax net, you know, all those kind of things. From a market standpoint, I mean, so you got fiscal consolidation but higher tax rates.
No, I think yes. I think those two factors obviously are at crossroads with each other, but I think markets will probably view it positively. I think, see, at the end of the day, if growth kind of picks up from where we are, from 6.1 to let's say 7.5, I think consumers will probably be able to carry on that baggage of extra 2% in terms of excise duty. So I think if fiscal consolidation clear path is there, unlike last year where you essentially had numbers which were fairly rosy, but at the end of the day the calculations didn't match up. So if you have something which is much more tangible this year, and which helps RBI essentially to cut rates and growth to pick up, I think demand will pick up. So I wouldn't. So I would probably place higher priority to fiscal consolidation. I think markets will take it in its stride if it gets the feeling that fiscal consolidation is going to happen for the year.
Okay, all right, got it. I'm just going to sort of revisit what Sarvendra got, in terms of calls earlier in the day. Sarvendra, why don't you run us through them? I mean, how are they working out? Markets have opened.
The first one in the pack was Reliance, which we feel should now targets around 870, 880 levels. I think we are fairly okay with that, and the setups look okay. And we continue to believe in that call and look for those targets. The next one was Sesa. As of opening, I think Sesa 2 remains well within that range, and it's now close to our, we said that buy around 210 for a better risk reward, so it is more or less there. It's at 211, so I think trades can be initiated there as well for targets of 235, 240. And then we had on the sell side we had JP Associates. Yeah, that call also seems to be, it's 2% down, and that was a CMP kind of a reco, so that trade has to be also taken with a stop at around 80.60.
That's intraday.
That stop is intraday because, as I said, the overall view on the market is positive. So short trades you would want to exit the moment you feel that you're going wrong. And then we had GAIL. GAIL as well, I think well within that range, should be initiated at the 360, 365 support range. Has been bouncing back for the last 4-5 months from that range. So it's essentially been between a 370 kind to 400 kind of a stock for the last almost 3 months, which I can see on the chart. So I think that bounces again on cards. You would want to trade it till 400.
Till 400.
Yeah.
Okay, got it. Just revisiting what those calls are looking like. All still hold for initiation. Sarvendra, thanks very much as always. Saumil, appreciate your time here on the show. Prashasta, thanks indeed. Shakti, thanks as always. Dorab, appreciate your time very much here on the show. Good to see you here in Mumbai.